All right, so good evening once again. Good evening, everyone. Today is our second time meeting, and then we are going to look at one or two things. Um, so with today, we are going to get straight forward to the strategy, right? So we are going to be giving what is needed, or the needed information when it comes to the strategy. Okay, so the market will be open in the shortest possible time. So that will be very soon. That's the forex market. But if you look at the crypto market, it's still active and it's still working, right? For the crypto market, it's always 247. It's always 247, and then it's always active as well. Comparing to the forex market. So with the forex market, it opens from Monday to Friday, and then on Saturdays and Sundays, that's during the weekend, um, the market is always closed. It's always closed, and then with the session, we have what we call sessions, right? So with the sessions, that's where we take our trade, right? So we have three sessions. The first session is the lending session. So the lending session is the first one, and then we have New York session. That's the second one, and then we have the last one. That's the Asian session. So when it comes to the sessions, most of the time you want when market moves very well. So when it comes to when market moves very well, that's with the lending session. So from lending session, then we come to the New York session, and then the Asian session is the last one. And then when it comes to the sessions, reason why um most of the traders or almost everyone prefer lending session and the New York session is because of its volatility. So when we talk about volatility, volatility is about the movement of the market in terms of its momentum, right? How fast the market reacts, right? So that's why most of the time when you take a trade on gold within some few minutes, it's either you are running a massive profit or maybe you are out of the trade. That's because of how its volatility is, right? So that's how the sessions are. But when it comes to the Asian session, with the Asian session, for them they are mostly for the what they do mostly is about manipulations. That's the Asian session. They mostly like manipulating the market. They mostly manipulate the market. Okay, all right. So you're all welcome once again. Okay, so let's get started. Let's get started because I hope you've been all waiting to start with the strategy. You've all been waiting to start with the strategy. Okay, so today we are coming to start with the strategy. Okay, so when it comes to the strategy, there are let's say 4 to 5 things that you need. That's the most important things that you always need in the market, right? So the first one is what we call break of structure, right? The first one is what we call the break of structure. So when it comes to break of structure, you can also call it the BOS, right? So that's a break of structure, and every okay, so we have what we call break of structure, and then we have change of character, right? So when it comes to break of structure, we have valid and invalid. So that's what happens to everything that you are coming to be giving. So when you take about order blocks, right, we have valid order blocks and then we have invalid order blocks. When you take FVGs, I'll say the same thing. When you take liquidity, I'll say the same thing. So that's why most of the time you are going to take your correct entry, but then um, at long last you are going to be taking off It doesn't mean the strategy is not right. The only thing is the entry is the problem, right? Where you spotted your zone is the problem. So like I said, we have to valid and invalid, right? So the moment you take a trade and then market goes against you, you just have to know that the zone that you took your entry from is what is an invalid zone, right? So we have what you call the break of structure. So when it comes to the break of structure, I think that's the most common thing, the first thing you are always to look out for. So it's either the break of structure or what, or the change of character. Okay, break of structure or the change of character. These are the first two things you are always looking for the moment you get to the chart. The moment you get to the chart, these are the first two things you are always looking for, because with a break of structure or a change of character is actually going to help you know what you are looking for in terms of market trend, right? So we are going to talk about them, but then when you come to the market, we have what we call um the trend of the market, right? So with the trend of the market, that is how you are able, that's how you'll be able to identify your break of structures and then your change of characters in the market. Okay, so with the trend, we have three types of trend. Okay, we have three types of trend. So the first one is what, the first one is an uptrend, right? The first one is an uptrend, second one is a downtrend, and then third one is what, is a consolidating market. So that's a consolidating market. The consolidating market. So these are the three types of what, three types of trends. So every time you get into the market, so the first thing is to look out for the trend, and then after the trend, that's where you apply the tools, right? So the first one is an uptrend. So how are you going to identify an uptrend? So an uptrend is when we have series of higher highs and higher lows, right? So higher highs and higher lows, that's where we can actually call that trend an uptrend. Okay, so anytime, is either market is going to present this trend for you. So how do you know that it's an uptrend? What you see is the highs always keep on what, creating above the previous high, right? The highs are always above the previous highs, and then so you are going to know that market is what, market is trending upwards. And then we have the second one, that's a downtrend, right? So when it with a downtrend, you can also see the lows of the market, which is creating below. I get it. So the low that the market is always going to create is what, is always below the previous low, right? The lowest is always below the previous low. The high is what, always below the previous high as well. And then when it comes to an uptrend, the low is what, always above the previous low. Are you getting that? So you are going to be easily identifying the trend. So let's look at how to apply a break of structure. So like I said, that's the easiest thing, like the first thing you are always looking for. But then most of the time you are going to also have the change of character, right? But then the common one in the market is what, is a break of structure. So how do you identify a break of structure? A break of structure is when market breaks a high, right? Market breaks a high of a price to create a new high. So once this high of the price got broken to what, to create a new high, in that case we call this level a break of structure. Why a break of structure? Because market was trending at this level, it gave us a pullback, and then later on it got broken. So it broke the high that we were expecting. So this is like a high that we thought market is what market is getting to, but then later on that high got broken, right? So this becomes what, this becomes a break of what, a break of structure, right? This becomes a break of structure. So you're going to identify it as what, as a break of structure. The same thing applies to what we have over here, right? So this also becomes what, becomes a break of structure as well. And then we're also going to have another one, that's what, this is also a break of structure. So like I said, in an uptrend, the highs are always broken to create a new high, right? The highs are always broken to create a new high. And then when it comes to a downtrend, the lows are always broken to create a new high, a new low, right? That's with a downtrend. So with a downtrend, the break of structure is always below, because that's the low. We are focusing on the low. So what we see is, this is we can say this is where market started from, right? And then after that, market came all the way to this level. That's the last low. And then with that last low, we had a pullback, and then it got broken, right? So that becomes what? That becomes our break of structure. So you mark it as what? As your break of structure. The same thing applies here. So this becomes our break of structure. And then we can also have a continuation as well. So this is also another break of structure, right? So as you can see, this is an uptrend, this is a downtrend. And then the last one we have is what is called the consolidating market. So when it comes to the consolidating market, we are always having equal levels. We are always having equal levels. So with the consolidating market, it doesn't have a specific direction. It doesn't have a specific direction, but then what happens is, it keeps on moving from one end to the other, right? One end to the other. So that's a consolidating market. So this is how consolidating market is. So you can see market moves to a high, and then it's what? It get rejected to a low, and then it moves backwards to a high, it get rejected to another low. So this is what? This is a consolidating market, right? So if you look at the trend, these are the three types of the trend. So with this, we don't have a clear direction of where price is getting towards to. But if you look at this trend, what you can see is, price is trending upwards, right? And then if you look at this trend, price is trending downwards, or the market is trending downwards. So the most suitable and comfortable trend to trade is these two trends, right? Because these are what we can actually determine the trend. So either an uptrend or a downtrend. These are the two things that, or the two types of markets that we mostly participate in. Because with this, you are always having a clear move on where price is getting towards to, right? So these are the two. But then when it comes to the consolidating market, you can trade as well, but most of the time you just have to focus on these two, because these two is actually going to give you whatever you are looking for in the market, in terms of any amount you are looking for, comparing to the consolidating market, right? So okay, so these are always what you are always looking for when it comes to you opening your chart. So the moment you open your chart, you have to identify that is price consolidating or trending, right? So this is consolidating, and this too is what is trending. Because when it comes to the trending, you can have trending upwards or trending downwards. Are we getting that? So these are the three types of the market. These are the three types of the market. And then when it comes to the reason why we normally focus on this trending market, it's very simple. Because if you look at the consolidating market, what you have to do is to take your entry from this low back to this high, and then you take another entry from this high back to this low. But the question is, when are you going to have a break, right? When are you going to have, let's say, a break of structure? So that's something unknown. So that's why you have to always stay away from them, because the moment you try to trade, you might not know. Maybe you are taking a sell. That might be when price is breaking. Maybe you might be taking a buy. That might be when price is breaking. So that's why you have to always stay away from the consolidating markets, and then you focuses on the trending markets. Because when it comes to the trending market, anytime price is trending upwards, you look for opportunities to buy. Anytime price is trending upwards, you look for opportunities to buy. And then anytime price is trending downwards, you look for opportunities to sell. So it's not just when you see your candlestick, right? Okay, so let me show you something here. Let me show you something here. So it's not only when you see your candlestick, let's say it's not only when you see your candlestick, let's say trying to sell and then you jump in because you are like that's a downtrend. No, that's not what you're talking about. But then we are talking about the price when it comes to its trend this way, right? When it comes to the trend this way, because if you look at the trend, you know that okay, this is an uptrend, right? So what are the kind of opportunities you are looking for? You are looking for opportunities to buy, right? You are looking for opportunities to buy, and then you don't just jump into the buy. You only wait for what? Wait for confirmations, and then you jump in, right? You wait for confirmations and then you jump in. Okay. So with the confirmations, that's where your strategy comes in. Yes, that's where your strategy comes in. So at the moment we are tackling the break of structure, right? So this is how the break of structure works. So as you can see, the break of structure in an uptrend is when the high of the market or the high of the price keeps on breaking to create a new high. Anytime we have a high of a trend, and then once we realize that high is being broken to create a new high, then we are looking at what we are looking at it as well as a break of structure. And then in a downtrend, the same thing applies here. When price keeps on breaking what a structure below, right, to create a new low. So when it happens that way, we also call it a break of what? A break of structure, right? A break of structure. So with a strategy, like I said, you are always to identify trend, and then when it comes to you identifying the trend, this is the easiest way of what of you identifying the trend. So every time people want to know the directional bias of the market. So when you talk about directional bias, it's simply talking about the trend of the market, right? Directional bias is simply talking about what? The trend of the market. So this is just the easiest way of what? Of finding them. Okay. So the second one is what? Is a change of character. Okay. So the use of a change of character is when you'll be able to identify that the trend of the market is what is now changing to a different trend, right? You now be able to identify that what the trend of the market is what is changing to create a new what a new trend, right? The trend is what is changing to create a new trend. So one thing is when it comes to the change of character, what you have to understand is price will not always be moving upwards only or downwards only. So it's not always going to be the same trend like all together, right? But then sometimes it has to also change. So when it comes to the change of character, the change of character is you keep on finding your break of structures, right? You keep on finding your break of structures, and then what you realize is markets go to this level, right? And then it also got broken, and then after that level was broken, price moved backwards, right? Price moves backwards. And one thing I also taught you, right? I said not too long ago that every time price is trending upwards, the lows of that trend is what is always above the previous low, right? So once you see that the high is above the previous high, the low is above the previous low, then it is what it is actually giving you a clear confirmation that the trend is what the trend is an uptrend. But the moment you see that this is what this is our high of the market, and then the low of that high is being broken, right? The low of that high is being broken, then you have what? You have a change of what? A change of character, right? You are having a high, right? Market keeps on giving us a high. We are having the lows of what? Of the trend, and then with the lows of the trend, we keeps on having the low above the previous low, right? So markets go to this level. So what we were expecting is what? A pullback, and then that pullback should be above this low, but then that pullback now broke that low. So it becomes what? It becomes a change of what? A change of character. It becomes a change of character, right? It becomes a change of character. And then in the time you have a change of character, what is next? It tells you now that price is what? Is now coming to start moving downwards. Price is now changing It's no more going to keep on giving you more buys anymore. But then the moment it's changed, now you have to relax and then you start looking for sales because the price has changed, right? So we trade based on what price is giving to us, or we trade based on what market is what is giving to us. So it's just very simple. So you keep on having your break of structures, right? And then the moment that last low get broken, then it becomes what? It becomes a change of character, right? It becomes a change of character. The same thing applies to, so this is in an uptrend, right? In an uptrend. So once you have a change of character, meaning the trend is now changing from an uptrend to what? To a downtrend, right? Price is now changing from an uptrend to what? To a downtrend. So now you will start having your break of structures below. So it tells you that now you start looking for sales on that trend, right? And then we also have when prices in a downtrend, right? When prices in a downtrend. So in a downtrend, we have series of what? Of lower highs and then lower lows, right? Lower highs and then lower lows. Okay, so anytime price give us this last low, right? The pullback is expected to be below this high, right? So that's the high price is going to create should be expected below this high. But then anytime price breaks this high, right? Because this is our last low. So what you see is this was our previous low, but then that pullback was above its previous high, right? So the same thing applies here. So this pullback should be somewhere here, and then we have a continuation. But in the moment price breaks this high, because this is our last low, the moment price breaks this high, then we now call it what? We now have a change of what? A change of character to the upside, right? We have a change of character to the upside. So with this, we now have a change of character to the downside, and then with this, we have what? We have a change of character to where? To the upside. So once the moment you are in this trade, you are taking your sales, and then you start seeing a change of character, then it tells you that it's enough of like it's enough, right? Your sales is now enough because price is now looking for a different trend. So you have to relax and then you now jump into what? Into the trend of which price is about to give it to you, right? So that's how it works over here. So this is the use of your break of structure and then your change of character, right? Your break of structure and then your change of character. So I hope we all understand. Before we continue, is there anyone with a question? Before we continue, is there anyone with a question? Is there anyone with a question?
Yeah, I have a question.
Okay,
Okay, so with regards to the first question,
all right,
that's the sections. You made mention that we have the three sections: the London, New York, and the Asian.
sure.
So my question then is
Okay,
with reference to, let's say, our time in Ghana. Can you
okay,
specify? Let's say what time is London session in Ghana, when it starts and when it ends.
all right,
In the New York, yeah. Then the second question is with regards to the trend.
all right,
So we knowing there is uptrend, downtrend, and the consolidation. How do we measure this? Are we measuring it with regards to which time frame do you then consider that this is the trend of a market?
okay.
All right, thank you.
You're welcome. All right. So when it comes to the sessions, right? To make it easier for you, London session is in the morning, right? New York session is in the afternoon, and then Asian session is in the evening. So when it comes to the London session starts at 8:30. The London session starts at 8:30. So let's say from 8 to 8:30. That's the opening of what of the lending session, and then it closes at 4 p.m. That's 4 p.m. in 4 p.m. And then when it comes to the New York session opens at 12:30. That's it, Ghana time 12:30, and then it closes somewhere 8:30 to 9, because the moment the market closes at that time, it has to also open for the Asian session. So after after New York session is done, the market has to be closed and then reopen for the Asian session. So with the Asian session, that is throughout the midnight, right? So that's throughout the midnight. Yes, so that's how the sessions works. That's how the sessions works. Okay, so and then when it comes to the trend, you were asking about the time frames that you are going to use to identify the trend. Um, when it comes to identifying the trend, for you to actually know the original trend of the market, you must always use the higher time frame. You must always use the higher time frame. So when it comes to the higher time frame, we can have of the monthly, the weekly, the daily, the 4 hours, the 1 hour, 2 hours, 3 hours. So these are the higher time frames, right? These are the higher time frames. And then we also have the intermediate, and then we have the lower time frame as well. So we have the 1 minute, 15, 10 minutes, 30 minutes. They are like, these are the lower time frame. So let's say 1 minute to 15 minutes or to 30 minutes, you can call them the lower time frame. And then sometimes from the 30 minutes to let's say 1 hour, you can call them the intermediates, right? But then for you to always know the actual trend of the market, you have to focus on the higher time frames. So with that, we can just use any of them, any of the higher time frame. You can use 4 hours, daily. But the only thing is, the more you use the higher time frame, you're always going to see what price is looking for. That's with the time frame, because the moment you switch to daily time frame, you now get an overview of of how price has been moving, let's say daily, right? So you now get to know that, okay, this is what price is looking for. And then we have what we call a multi time frame, right? We have multi time frame. With the multi time frame, and then how it affects the trend, you can have, let's say, a higher time, like an uptrend on a higher time frame, and then you have a downtrend in a lower time frame. Are you getting that? It do happen. And then one thing is, it's normal for price to happen that way. It's normal for price to happen that way. So like I said, the moment you now have an uptrend in a higher time frame and you have a downtrend in a lower time frame, the work is now even easier. So what you have to ask yourself is, why is it that price is uptrend in a higher time frame, and then price is what also a downtrend in a lower time frame? The only thing is, price is now looking for what? Looking for more opportunities to what? To buy. I get it. So you don't become confused when you see your higher time frame being in a let's say you see your higher time frame in an uptrend, and then you see your lower time frame in a downtrend. The only thing is, price is looking for more opportunities to buy, right? More opportunities to buy, until when you see your higher time frame changing its structure, right? Changing its structure or changing its character. That's when you also start looking for sales as well. So please, is your question answered? Is your question answered?
Yeah, it is. But then I want clarification on if your higher time frame, as you stated, is uptrend, but then currently your lower time frame is presenting downtrend. That's when the higher one is presenting uptrend. Which one do you then focus to when trading immediate?
You focus on your higher time frame. You focus on your higher time frame. But then with the lower time frame, that's suitable for entries. because the higher time frame is, let's say, giving you this move, right? It's giving you this move, but then with that lower time frame, that downtrend you are seeing is what is that's the pullback, or what we call the correction. So the price on the lower time frame is always looking for a correction to what, to continue the trend. I get it. So with price, we always have what we call impulse and retracement. So impulsive move is always what you are going to have in the higher time frame. You're always going to see the impulsive move. So with the impulsive move, that's going to show you the trend, right? But then when you get to the smaller time frame or the lower time frame, you are going to see the impulsive and then the retracement all together. Are you getting it? So you can have like let's say you might get to a higher time frame and then you are going to see trend moving this way, right? So that's an uptrend. But then when you get to the lower time frame, that's where you are going to see how price was behaving, right? So you are going to see the impulsive, the retracement, the impulsive, the retracement, the impulsive. Are you getting that? So with a higher time frame, you are seeing the trend as what, as an uptrend. But then with a lower time frame, that is where opportunities were being presented for what, for
Interest.
yes, for investors to get into the market. Are you getting it?
Okay.
Yes.
Okay, that's
So
fine.
that's how it is. So the
Yeah.
higher time frame is just giving you the overall view of the market, or overall view of how price reacted, right? And then the smaller time frame is
Okay.
giving you everything, how price reacted, giving you everything of how price reacted.
Okay. Okay. Thank you.
Yes, you're welcome. You're welcome. Okay. So I hope it's been answered now. Okay. So is there anyone? Is there anyone again? Is there anyone else with a different question? Is there anyone with a different question? Okay, is there anyone with a different question? Okay, so no, we are good. All right, all right. So do we all understand the break of structure and then the change of character on how price uses them? Do we all understand it now? Okay, so at this time, kindly let me have it in the comments so that I'll get to know that you understand it, so that we can um move on. Okay, so Andrew said yes. All right. So do we all understand? Do we all understand? I want to make sure you all understand before we continue. Okay. Okay. All right. So that's it. Okay. Okay. So anytime you get to the market, you are always looking for your trend. After finding the trend, you now look for your break of structures and then your change of characters. Why do you look for break of structures and then change of characters? It helps you with what, with your entry. So before you take a trade, you now get to know that, okay, okay, Jamfi, you've raised your hands. Your question. Okay, Christian, we are listening to you.
Oh, sorry, it was a mistake. I don't have any question. I've understood everything.
Okay, so Eminence TV, Eminence TV.
My question is that when
Okay.
in which time frame is more like valuable to use to check your center structure and the BOS?
All right. I didn't hear that. I didn't hear that. Come again, please.
Like like if you want to map out your change of structure and the is it good doing it with higher time frame or lower time frame, such as maybe 15 minutes, or is it good in 4 hours?
Okay, so when it comes to mapping out mapping out your change of characters and your break of structures, right? You can always spot it on a higher time frame, right? So like I said, the higher time frame is going to give you the overall view of the market, right? But then the moment, okay, so the moment you reduce it to the smaller time frame, so let's say like 45 minutes, 15 minutes, 30 minutes, you are going to have internal structures. Okay, so we have what we call the internal structures and then the external structures. Are you getting that? So with the higher time frame, you are going to have the external structures of what, of the market. But in the moment you switch to a lower time frame, you are going to have the internal structure of what, of the market. Please, I hope you are being answered. I hope you are being answered. Okay, okay. So that's how it is. So the moment you switch on to your higher time frame, you're going to have the overall view. So let's say on a higher time frame, you're going to have like maybe three break of structures, right? But in the moment you switch to a lower time frame, you're going to have about maybe 16 break of structures. And then it's just because with a lower time frame, price shows a lot of what, a lot of impulsive and then retracement, right? A lot of impulsive move and then retracement move. So most of the time you can just spot. Okay, and then one thing here too is with a higher time frame, it helps you to identify where exactly you are to what, you are to expect price to. Are you getting it? That's with a higher time frame. It helps you with what, where you are to expect price to, right? And then when it comes to the lower time frame, that's the work of the lower time frame is mostly about your execution. It's mostly about your execution, so that and then with a lower time frame, your SL reduces, right? That's with the lower time frame. But then with a higher time frame, your SL is what? Your SL is always wide. Your SL is always wide with a higher time frame. But then on a lower time frame, it reduces. Are you getting that? So that's why you are always being they tell you all the time to us to take your entries from a smaller time frame. Okay, so I hope no one is confused over here. I hope no one is confused over here. I hope no one is confused. Okay, okay. So is there anyone with any question again? Anyone with a question again? Anyone with a question? Anyone with a question again? Okay, okay.
I do have a question.
All right, all right. So we are listening to you.
I just okay. I just wanna ask if the section of the market has any effect on it.
Yes, yes, it does. When it comes to the sessions, the effect it has on the market is about its volatility, right? That's the effect it has
Okay.
about the market. It's about its volatility. So most of the time, we have this session that everyone is trading. That's the lending session. Everyone is trading the lending session. Why? Because of its volatility. Lending session is highly volatile comparing to all other sessions. Lending session is
All
highly
right.
volatile. And when it comes to fundamentals, most of the time, fundamentals, when in terms of, let's say, the US economy, it happens during the New York session, because that's mostly on the, like, about the US economy. Okay, so we have of the NFPs and then others, the CPI and the rest, right? So for them, it happens during the New York session. I get it. But then when price actually moves a lot is mostly during the lending session. Mostly during the lending session.
All
So
right.
that's the effect
Thank you
on
very
it.
much.
You are welcome. And when it comes to the Asian session, most of the time you are to stay away from the Asian session because Asian session is likely going to take you off and still move at where you are expecting price to get to. So that's why I said with the Asian session, it's more or less like a manipulative market. For them, what they do most is what is manipulating. They are always manipulating. Yes, they are always
So
manipulating.
does that mean that the lending session is one of the best session you are recommending it for us to trade?
Yes, when it comes to the sessions, London session, New York session. So most of the time, you can even decide to take
So
trades maybe mainly on the London session or New York session. Either the two.
okay.
Yes,
So London is in the morning and the New York is in the evening or the afternoon.
that's the afternoon.
Okay. All right.
Yes, you're welcome. All right. So any other question? Any other question? Any other question? Okay. Okay. So let's get to the charts, and then let's see how it works, right, in terms of your break of structures and then your other blocks. Let's see how it works over here. I'm coming. Okay, so we can have this trend, right? So this is GBP USD, right? This is GBP USD. Okay, I'm coming. Someone wants to join. All right, so this is GBP USD, right? So on GBP USD, you are expected to know the trend of the market, right? And then what are you seeing over here with the trend of the market? So what you see is when price started, it was a downtrend, right? It was a downtrend, and then now price is in an uptrend, right? Price is in an uptrend. So this is on a 2 hour time frame, on the 2 hour time frame. And then how did you know that price is in an uptrend? So how you got to know is this is our last pullback. This is our previous high, right? And then that high is being broken, right? That high is being broken. So this is an external change of character. And then what you see is what now a continuation. So we have break of structures. So now price is what is now looking for more opportunities to buy, right? Price is looking for more opportunities to buy. So that's on GBP USD. And then if you reduce it to if you increase to a 4 hour time frame, you're also seeing the same thing. The price started trending from this high, right? It started from this high, and then it kept on moving downwards, and then later on it's being broken. The high is being broken. That's the our previous high for the low, right? Our previous high for the low is what is being broken. You can even see it over here. It's being broken, and then we have continuation to the upside. So that's how it works. So once you want to take a trade, right? Once you want to take a trade, what you'll be looking for is just two things, right? You look for opportunities to buy, and then also you look for opportunities whereby the buy you are taking shouldn't take you off in terms of when sellers are coming into the market, right? Because anytime price has already given you a move already, you are to expect two things, right? Anytime price has given you a move already, you are to expect two things. The first one is At the moment, we have an uptrend, right? So we'll be looking for more opportunities to what? To buy. Okay, so you are not to expect buys only, but you have to also look at the left side of what? Of the trend, right? The left side of the trend being a downtrend. So it tells you that once price was also presenting itself in a downtrend, there is an opportunities of selling, let's say selling zones that price did not use, or there are opportunities of selling zones that price did not use. So once this buys keep on moving and then it get to that level, that's when price starts selling from, right? That's where price starts selling from. So every time you are just looking at two things, you are looking at the buying opportunities side of the market, and then you are looking at what? The selling opportunity side of the market. Okay, so we are going to get there, but then for today you have to know the trend, and then you know the break of structures, and then the change of characters in the market, right? In the market. Okay, so based on what I said, is there anyone with a question again? Is there anyone with a question again? Is there anyone with a question again? Okay, all right. So this is also on BTC, right? So if you look at BTC on a higher time frame, the overall trend of BTC is a downtrend. That's the overall trend of BTC, is a downtrend. But then what are we also seeing? BTC is finding its way to what? To take more buys, right? But then unless BTC surpass this level, right? Unless BTC surpass this level, that's where you can now boldly start looking for more buys. That's one thing over here. Unless BTC surpass this level, that's where you can boldly start looking for what? Looking for more buys. Because at the moment, the trend is still a downtrend. It is still a downtrend. We have these highs that market hasn't been able to break, right? We had a high as a pullback that market hasn't been able to break. So at the moment, although price is still trending, right, gradually, oh, okay, sorry, gradually price is what? Is still trending. It's finding its way to what? To take more buys, but then it's still bearish. It's still bearish because at the moment market has an upper hand, right? Market has an upper hand of what? Of selling more. Market has an upper hand of what? Of selling more, right? So until we break past this level, that's where you can boldly what? Start looking for what? Looking for more what? More opportunities to what? To buy. Are we getting that? So it's just as simple as that. Okay. So is there anyone with a question again? Anyone with a question? Anyone with a question? Okay. So I hope we all get it now. I hope we all get it now. So before we close, I want to give an assignment, right? And then the assignment is about spotting change of characters and then break of structures in the market, right? So and then just spot them. So in an uptrend, you know how to spot the break of structures, and then in a downtrend, you know how to spot the break of structures. You don't have to be perfect before you start doing something, right? You have to actually start something to become perfect in it. Are we all getting it? And then you don't have to also doubt yourself. You don't have to be doubting yourself. You're like, I'm doing it the wrong way or something. Just do it anyhow you understood it. Just do it, right? Because that's how you understood. So once you present it to me, I'm going to help you with the corrections. So what you didn't do it the right way, I'm going to help you do it the right way. That's how we build, right? And then if you also have questions, make sure that you ask questions. Right? Make sure you ask questions. So as long as you are learning, you are also asking questions, and make sure you are always applying it. Anything you learn, you apply. Anything you learn, you apply, right? And then there are some kind of information that maybe I'm not going to present it to you, but then you have to find those kind of informations yourself. Okay, you have to actually do that. So one thing is that please drop the assignments on the WhatsApp group. Like, okay, okay.